Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating. This content is brought to you by Uphold, which is a great platform that allows you to easily buy, sell, trade, and earn cryptocurrencies. I've been using Uphold for years, and in fact, they have some very cool promotions running right now. For example, you can trade Bitcoin for free. They just enable Polkadot withdrawals and deposits. And they also enabled staking for Casper, so that respective token. So a lot of great things happening on Uphold. And if you'd like to learn more, please visit the link in the description. All right, my friends, today we got a lot of big crypto exchange news, but some really important ones. First up, Visa has partnered with FTX in a bet that shoppers will want to spend cryptocurrencies in a bear market. So Visa is teaming up with the global crypto exchange FTX to offer debit cards in 40 countries with a focus on Latin America, Asia, and Europe. It's the payment giant's latest foray into the space with more than 70 crypto partnerships. Rival MasterCard has been on a similar deal spree. Here's a quote: "Even though values have come down, there's still steady interest in crypto," says Visa CFO Vasant Prabhu. So guys, we're seeing some massive partnerships. Visa is no joke, right? And obviously FTX in their own right is no joke. FTX, I got to believe they have a massive war chest of capital because they're looking to buy companies that are going bankrupt and having problems. Sam Bankman-Fried, I have to say, is a really great businessman because he's doing great marketing. You know, they did a Super Bowl ad, they bought the naming rights of the Miami Heat arena and much more. And in the bear market, they got their treasure chest, once again, their war chest ready to deploy to grab up companies. And despite the prices being down, despite macroeconomic factors that has everyone scared, they're still building. They're still expanding partnerships, acquisitions, mergers. And this is a huge partnership. So certainly the on and off ramps being built for mass adoption of crypto, because as the values rise, people will then want to spend that crypto respectfully. So huge news here. Now, will a lot of people be spending in the bear market? Probably not a lot, but a good amount will, because you have to remember there are people who have been here a long time in this market, and they probably are up significantly. Maybe they bought Ethereum at $5. Maybe they bought Bitcoin at just $50, right? There are whales. There are people who've been here a long time and who got certain cryptos at certain valuations. So the prices right now are still, the returns are still incredible for them. While for those who got in later and maybe bought the tops of markets because, you didn't understand the cycles, you wouldn't do that, right? Because you're holding for the next bull market for higher valuations. That's just investing, right? And your timing. This is why it's important to understand the market cycles and to know when to enter. So the valuations of cryptocurrencies are down right now. I've been talking about, I've been accumulating, buying the dip where possible. I don't know what the exact bottom will be, but I believe we are in a buy zone, and that zone will encompass, the price bouncing up and down, probably going a bit lower, then going a little bit higher, but still within that the low zone, that when the bull market comes and we get higher valuations, you will still be making a nice return. So, once again, further proof that these institutional investors are bullish. They are looking at this market from a macro perspective, not a 1 month, not a 1 year. They're looking at it from a yearly perspective, and that is how smart money operates. So very big news here. And here's what Visa tweeted out on their Twitter handle. They said, "Crypto meets convenience. Unlock the ability to use crypto to fund everyday purchases securely. 24 hours a day, 7 days a week, 365 days a year with the Visa plus FTX debit card." Pretty amazing, guys. And this is being pushed through the Visa channel. So people who may not have exposure to crypto, who may not trust crypto and haven't touched it at all, will now be that barrier is going to break down for them, the barrier of trust, that they may not have had that trust, and just the education. So this is pretty cool, guys. Now, here's another big exchange news. Crypto exchange Huobi Global to be acquired by About Capital. The terms of the deal are not disclosed. So this is interesting. So crypto exchange Huobi Global, one of the biggest token trading outposts in the Asia market, said late Friday that it has agreed to be purchased by Hong Kong-based investment company About Capital Management's M&A fund. In a blog post, Huobi Global, a top 10 exchange by trading volume, said About will control the majority stake of Huobi once the deal closes. It said the ownership transfer will have no impact on trading operations. The news comes after months of speculation and reports that founder Leon Lee was seeking a buyer for his nearly 60% stake in Huobi and was asking for at least $1 billion. Wow. The terms of the deal with About Capital were not disclosed. Under the new ownership, the exchange is plotting an international expansion. So keyword there, my friends, expansion, and will receive an injection of sufficient capital in margin and risk provision fund, the blog said. In a statement, Lee, who founded Huobi in China in 2013, said the exchange's late 2021 departure from the Chinese mainland kicked off a globalization push that will now accelerate under About Capital. Huobi's native token HT rose sharply on the news. So, guys, the expansion continues, and it looks like some big traditional financial players are now entering in, trying to grab up equity where they can, whether it be exchanges or wallets or any type of software solutions service for the crypto market. So big news here. Now, some not so good news, and those of you who are Celsius users are not going to like this news. Celsius exposes user information in public court documents. The crypto lender asked the court to redact names, but that request was shot down. This really sucks. So users' information and how much crypto they had on Celsius network is being exposed. Alex Mashinsky really screwed this up, man, big time. But it is what it is at this point. So a filing submitted to the court on Wednesday contains over 14,500 pages that include co-founders Alex Mashinsky, Dan Leon, and Nuke Goldstein's financial transactions. But it also lists customer names, date of transaction, type of account, which crypto asset, and how much of it was involved. The firm appears to have complied with a federal court rule that allows personal information like home addresses to be redacted, however. Well, that's good. At least your private home address is not on there. Thank God. Celsius filed a motion on August 3rd asking the court to redact names and addresses of its users, citing threats of identity theft and safety concerns. It proposed using an address on file notation instead of providing specific details. A group representing Celsius unsecured creditors had also joined the lender in requesting the court to protect personal information in public filings. But U.S. trustee William Harrington objected to the request, arguing that redacting names and other information would violate the principle that all bankruptcy proceedings should be open and transparent. Here's a quote: "The movement Celsius must demonstrate extraordinary circumstances and a compelling need to obtain protection to justify any such request," Harrington said. "Allowing incomplete statements would be a slippery slope, he said, as it would create an unfavorable precedent for crypto and industry industries. The crypto lender, which saw former CEO Alex Mashinsky and co-founder Dan Leon exit in the last week, has left investors alarmed over what risks of their information leak could entail." This thing is going from bad to worse. We know that, look, the folks at Celsius, Alex and so forth, they cashed out before the whole bankruptcy filing. It's just a mess. And I don't know if we'll ever see these guys again. They're probably going to go into hiding because, look, I've had Alex on this show on for years, guys. Many of you have seen I've done probably 5 interviews with Alex, and of course, nobody knew this was going on, and it really sucks. But this is where the SEC failed. Where were they? Reviewing these firms, and it's not. They have to do an enforcement. I'm not saying they should have went ahead and sued Celsius, but they should have went and asked them to see their books and make sure everything was in order. And this is why we need regulations, guys. Regulations can be good. Yes, we have to make sure it's balanced and it's not draconian and it fosters innovation. but we need protections, right? You just clearly look at what happened with Celsius, look at what happened with Terra Luna, look what happened with Voyager. Those those guardrails have to be in place to protect users. Now, yesterday we talked about Binance and the hack that happened with Binance's smart chain. Certainly not a good thing. That was bad. However, we got news that they're seeking to boost Web3 adoption in the MENA region. The exchange alleges a 49% increase in user signups across the Middle East and Northern Africa, which is, of course, the MENA region. So according to the exchange, this growth indicates an increasing interest in virtual assets supported by progressive government initiatives. This could enable regulated businesses to enter the space, thereby raising awareness and driving adoption. To scale its product in the MENA region, Binance has increased licensing and partnerships with regulated firms and increased its team within the territory. In Dubai alone, Binance has grown its team to over 400 employees. Wow, that's a lot. The exchange seeks to work closely with the appropriate officials in Dubai and the wider United Arab Emirates to develop a robust virtual asset infrastructure that protects the market and investors. Guys, the world's largest exchange, they're expanding, they're hiring, they're spending the capital. Once again, they know they're not going to make money right away, right? Like in the coming months, but they're looking at the mass adoption that's coming over the years and the next bull market. And like I've said before, the next bull market will be larger and bigger and more epic than the past ones, right? Because the on and off ramps are being built globally. And look, the Middle East is a big market. There's a lot of capital there, my friends, a lot of oil money. And, we've seen guys like Kevin O'Leary talk about sovereign wealth funds. And when those countries are ready, once the regulations are there and they start putting the billions and trillions into crypto, oh my goodness, it's going to be pretty crazy, as far as what's going to happen with the price. So this is why, once again, you got to have a macro view, long-term view. And when I see news like this, that these companies are investing and building and expanding, that makes me bullish. They know higher prices are coming, more revenue, more users and all that, and the technology being adopted in the real world. So that's why they're taking the bet. If it wasn't that was not the plan, and there's not money to be made, they would not be doing this, right? It's simple business and economics here. Now, we got some hiring news, which is, of course, a great indicator of the bullishness, a bullish outlook of the market, and that we are building and expanding. So, the latest in crypto hiring, Andrew Yang. Many of you recall he's the politician that tried to run for president to advise Web3 focused firm. And many of you may say, well, what? Why is Andrew Yang advising a Web3 firm? Well, he's actually a big techie. His background is technology, guys. So he knows what he's doing there. And that was part of his whole political campaign and, looking at growing technology. And yes, he was looking at universal basic income from tech companies and so forth. But anyway, that's a whole other conversation. And then also Bitcoin company NYDIG names new CEO and president after its Bitcoin balances hit an all-time high. So let me give you the details here. 2020 Democratic presidential candidate Andrew Yang joined Pool Data as a strategic advisor as he seeks to transform the data economy via Web3 technology. Pool Data is deploying Web3 to build infrastructure in an effort to allow people to monetize and control their online data. Yang said in a statement that the data economy is on the verge of a once-in-a-generation shift. So very bullish. And then, of course, NYDIG, they promoted Tejas Shah and Nate Conrad to be the firm's CEO and president, respectfully. So, guys, the things are moving ahead. And then we also have Alexandra Keck, my gosh, who is leaving his role as director of blockchain and digital assets at Citi Ventures and is set to join Six Digital Exchange. So the poaching, the hiring is happening, guys, and that's a sign of growth. That's a sign people have a bullish outlook on the crypto market. Final news item here. India's central bank outlines digital rupee CBDC plans. So we've been hearing rumors from different countries around the world of these central banks looking to get their CBDCs going. They're piloting, they're testing it. Guys, the token economy. And I'll say this, I'll repeat my stance on CBDCs. I think there's a lot of benefits, a lot of value that are going to come from CBDCs, and it will benefit crypto big time. However, my concern, of course, is when you give government, this level of control and power, what will they do with it? And I'm concerned here, at least in the United States, of privacy. Will they abuse this power? We've seen it historically. They probably will, but there's no way to stop this thing. It's coming. And the good thing is we at least have alternatives. We have Bitcoin, we have XRP, we have Ethereum, we have these other currencies that, we could not, I shouldn't say not use, because at some point you will probably have to use it in some way, but you don't, you can use it, you have alternatives, I should say, and you can bypass certain transactions and so forth by using crypto. Not to say that, look, these exchanges, the governments, they're going to be monitoring all blockchains anyway with AML, KYC, but at least, the CBDC is giving more information to the government about everything that you spend and everything you do. I would rather go use another cryptocurrency where some information is shared, but not everything, right? There's not the NSA sitting there looking at every CBDC transaction and everything you're doing. So the silver lining here is that we have alternatives with other cryptocurrencies, but goes to show, guys, this thing is happening globally. It's going to be part of the token economy. I know a lot of Bitcoiners, hardcore Bitcoiners, they're always talking trash about CBDCs. Once again, I've shared my concerns, but I also see this as very, very bullish for the market, because once they release these things, they're going to educate people about it. They're going to let them know what the blockchain, and that it, once again, will bring the education factor, remove the lack of trust factor for many people that will help them to enter into the crypto market. Anyway, guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I will talk to you all later.